Hello, good morning and welcome to our latest Bristol Life Business Surgery, this time with Close Brothers Property Finance. My name is Greg Ingham and thank you for joining us this morning. Today's session is designed to cover many aspects of property, from valuations to deal financing to prospects for Bristol property, and of course the near and longer term impact of the pandemic and all our thinking about property. We'll be speaking with our all-star panel, and it really is. We've got some great names today with Close Brothers Property Finance. First up will be the Business Development Director, Richard Hemmings. Then also Adam Greenwood, Director at JLL. Chris Lester, Director at MDA Consulting. James Stevens, Director of Cities at HBF. And John Morgan, Director at Juniper Homes. So we'll be exploring multiple areas, including the housing market in Bristol and the wider Southwest, the trends, the demand, consumer confidence, the various governmental schemes, environmental impact, the desire for more flexible space indoors and better options outdoors. Please do send your questions through and any comments using the Q&A button below. You can ask anonymously or be named as you like, and add your company name to your question, and we'll name check you as we pick up those subsequently. Note also, today's business surgery is being recorded and will be on our Bristol Life YouTube channel later this afternoon. A few updates from us. Our next Bristol Life Business Club, which is a panel session, is on the 2nd of June and will be an events special. And there's a sector which is having to figure out how it works, what its destiny is, and so on. It'll be a fascinating session. We'll be running further Bristol Life Business Surgeries. These are the bespoke deep dive sessions showcasing companies' expertise through discussion rather than presentation. Business surgeries will very much continue as virtual in the future, and they'll have that enduring value via Bristol Life YouTube video channel. Please talk to us if you'd like to be involved. One thing we did recently, we worked very closely with our partners to create distinctive webinar and conferences, such as our major hospitality conference on Monday with Crumbs. We'll be running further Bristol Property Symposia. Please talk to us about getting involved. You can focus on a sector and discuss in a deeper form than an hour session, 2 hour session, whatever, and get under the skin of what is happening in individual sectors. The Bristol Life Awards will be held on 16th of September 2021, that's this year. Nominations are closing tomorrow. I mean, it seems like a long time out, but it covers the prior financial year period. Please do look lively to get your nominations in. It's free to enter and all the details are on the website. Great profile for all our finalists, let alone our winners. We're running a new grand reveal, which I think is referenced there, next Wednesday, April 28th at midday. All the finalists revealed live for each category. Drama of the awards, but we're doing a prequel, I guess, sponsored by Bristol Sport, and our thanks to them. We've got a great roster of sponsors for the awards, led by headliners Marsh Commercial. If you're an ambitious company or one seeking to rebuild your business pipeline, plain proud to be a leading Bristol company, please do consider sponsoring. And everyone coming together, from the coolest of the indies to the largest of the corporates, it'll just be the biggest and best celebration. I have to say, I think we all probably need it. We also run the Bristol Property Awards, and they'll be back in real life on the 12th of November at Ashton Gate. Many months of marketing culminating in this lunchtime and afternoon event, and a huge gathering of property and pro services companies. Yeah, sponsorships are available, but look at the caliber of the 18 sponsors we have already committed, with several other categories under discussion. It's a fantastic roster, and we're really pleased and frankly grateful for the support we've had from the property sector. I think there's 2 or 3 slides of sponsors already, and this is something that's taking place in November. They're part of a suite of 4, I'm sure I should have a property metaphor for that, but anyway, 4 bespoke property assets which we create, the Property Awards in Bath, Cardiff and Exeter, as well as Bristol, and the latter in Exeter is headline sponsored by our sponsor today, Close Brothers. One more event, and it's about entrepreneurs, and it's called EntreConf. Entrepreneurs are central to this city, new ways of looking at the world, new business models, new services, products, jobs, of course, new opportunities for advisors, investors, financial companies, lawyers, academic institutions, marketing agencies, and so many more. So we're launching EntreConf, the Entrepreneurs Conference. The future is unwritten, as it says there. It's virtual this year on July 1st, the real life dinner in the autumn, full-blown conference in 2022, pitched at startups and scale-ups right the way through the value chain, aiming to give profound insight, great inspiration, catalyze partnerships, and celebrate the special contribution of entrepreneurs. Terrific response so far from the handful of briefings we've had. It's quite clear that entrepreneurs generate excitement as well as opportunity, which will be good. Site's now live at entreconf.com, and let's talk if it's of interest, whether about speaking or sponsoring. And yeah, the future is written for us all. At the heart of what we do in Bristol is Bristol Life, and thank you again for your support. Please look out, there's the graphic, please look out for our 300th issue at the end of May. It's backed by a marketing campaign featuring all of our advertisers in that issue. It'll be a high-profile issue with several additional gorgeous features. It'll be our biggest since 2019. More immediately, our next issue of Bristol Life, which is out on May 7th, has a major property feature, so directly relevant to everyone today. Promoting your sector, please do speak with our team. And across the piece, it's great to see the momentum building and confidence rising just this last weekend and this week. You can just feel it. Momentum is being generated. Right, let's do this. Let's bring forward our speakers for this special Bristol Life business surgery on Bristol property with Close Brothers. I'll just run through the bios of our speakers as they come to camera. We'll be speaking with Richard Hemmings, Business Development Director of Close Brothers, been with Close for over 15 years, works with borrowers across the Southwest to fund residential developments, supporting his clients on a wide range of schemes. Chris Lester, MDA Consulting, he's the National Head of Project Monitoring and very much leading the Southwest Monitoring team, been working in the construction industry since 2004. Adam Greenwood, good morning, Director at JLL, an accomplished and qualified commercial and resi property consultant, experienced in the valuation of all main property types, but particularly specialising in resi developments. John Morgan, Director of Juniper Homes, another experienced person in the property scene, very much experienced property developer, set up Juniper Homes to create homes that people would love to live in. He seeks to combine the creative with the practical and adding the business know-how that turns a site into a successful community. James Stevens, Director of Cities for HBF, the Home Builders Federation. And it's a newly created role to help the industry engage with the newly created Metro Mayors and Capital Authorities. Welcome to you all. I hope you're fighting fit for today. Richard, let's begin with you and with Close Brothers. Tell us how business is currently. How would you assess the world from your perspective?
Morning, Greg. Morning, everybody. It's surprisingly good, I think, in the context of what's been going on in the world for the last 12, 13 months. We're still seeing good levels of repayments, good levels of new borrowing, and to a large extent, that's almost counterintuitive, I think, when we've stayed open throughout since the first lockdown all the way through to today. And I would think that at the outset, we probably had a degree of circumspection about what was going to happen. As it's transpired, builders have continued to go through, and yeah, business is, as we sit here today, very good.
It's strange. I heard the expression the other day about something almost akin to survivor's guilt. People don't like to say, well, actually, it's not that bad. And I think it's essential that all forms of businesses and sectors say, actually, trading is, perhaps slightly to our surprise, pretty robust. And that seems to be the case with Close Brothers. Where are you seeing growths, but also falls year on year, either by type of sector or even geographies?
Well, of course, we're quite narrowly focused. We're short-term property lenders, but we principally look at the residential development market. So that's a difficult question for me to answer in sort of globally. I think in terms of growth, there certainly is some momentum coming back into the market. But I think, as importantly, it should be focused on that builders have continued to keep going through. So it's as much about resilience as it is about the growth. But going forwards, I mean, will this be the year of two halves? Perhaps it will be. As we come out of lockdown, as we come through second half of the year, perhaps then this momentum that we're building now will be a build, and we'll see growth across all sectors from there.
And we'll come on to the point about time horizons that you each share. In comparison with other sectors, the property sector has to take a midterm view. But let's come to one aspect of that. How would you assess consumer confidence currently?
That's again quite an interesting one. There was a good figure that was reported yesterday. I read where retail footfall was is up 648% on the same week last year. Obviously, with the non-essential shops reopening, which to an extent could be a broadcast from the Ministry of stating the blooming obvious. But on the other hand, I think it shows that there really is that intent to spend out there. When I think there are a number of surveys last year which said that consumer confidence was obviously very low in April, May last year. And in actual fact, in the Southwest, it was lower than in the UK overall. Now, rolling forwards to this year, the Southwest has seen possibly the biggest fall in business confidence of any English region. And I would guess that's probably as much to do with hospitality and tourism. But on the other hand, there's the confidence in the construction industry in the region is actually higher. And then I look at my own market and I see people are still building and buying houses. In fact, sales are going through at an incredibly strong rate. So I think consumer confidence in the housing market remains very strong. And there will clearly be things that we're going to go on to talk about through the rest of the morning, various factors which have helped to fuel that growth and resilience. What will happen when they fall away? But I think at the moment, consumer confidence in the housing market does seem to be still strong.
Yeah, and we'll come on to some of the governmental initiatives. But if I could bring in the other panelists on this, and please join any of these questions. At our recent Bristol Property Symposium, Savills Head of Research, Lucian Cook, in his keynote, articulated why Bristol was uniquely placed to bounce back strongly. Do you agree? And if so, why? What makes Bristol so markedly stronger in potential? And perhaps you don't agree.
Greg, if I might come in here, if it's okay to answer that question. I mean, it's one of the things talking to our members who operate in the Southwest, including the Bristol City region, for which I have a particular interest in through my engagement with the West of England Combined Authority, is that the economy in Bristol, the Bristol City region, is still a very strong one. It's remained resilient pretty much throughout the pandemic, just as it did in the financial crisis of 2008, 2009. But the deficit, the paucity of housing supply in the region compared to the latent demand for that, particularly the right kind of product. And typically, the hottest areas of the market tend to be in South Gloucestershire and North Somerset and Bath and North East Somerset. That's where the real battle lines are fought over getting planning permission. But the demand for homes in those areas has remained highly strong, underpinned by the slow way and the reluctance to actually bring forward housing in those areas. So I talk regularly to our members around about the country, and I have a meeting with our Southwest members this afternoon, but I met with them last month, and the sentiment there that from the public for housing in the Southwest remains incredibly strong. It's very great, and to a certain extent we are a nation of two halves, and that's true. There are those people who have existing housing equity who really are driving the demand in the Southwest at the moment. And then you have those who are still trying to get on the housing ladder who find that very, very difficult. And one of the challenges in the Southwest is actually providing the type of homes that can meet that particular market segment, those first-time buyers. But we can come on to that later.
To come on to that, it's both about providing those homes, but of course about funding the purchase of those homes. And there is that new government initiative which has been announced. Come on to that in a sec. Lucian Cook also spoke about the uncoiled spring, which is a very sort of potent metaphor, and that in property terms, the conditions were right for a really strong performance. It's not just bounce back, it's a leap forward. The argument being that the strength and diversity of employment in Bristol, the reputation of the city, it's an increasingly cool city to be based in, and indeed the region, and that underpins a potentially really strong performance. Further thoughts in that area about the reputation of the city and its ability to attract people and thereby drive value through the city.
Greg, I'll take that if you'd like.
Yeah.
I mean, as valuers, we're always looking at what is driving demand and value. And I think if you notice over the last few years, you've had Bristol as one of the coolest cities to live in. You've had Easton being one of the best top 40 neighbourhoods in the whole world to live in. And then you've recently had The Guardian talk about Bear Flats in Bath as a very cool place to live. So we do seem to be collecting this. Either the writers for these various articles are based in this area, that would be my guess, but certainly when it comes to Easton, but it does seem to attract those just cooler tech side of business. You've had artists, Banksy. So yeah, it's definitely on people's radar. I think underlying all of that, Bristol and its surrounds and Bath seem to be just very resilient economically compared to the rest of the country. We don't tend to weather the same storms as other areas. And I think we've got strong aerospace with Rolls-Royce and GKE, I think it is, have just expanded a new wing facility in Filton. And then you've got the arts, you've got Channel 4 moving here, you've got Ardman, and then you've got the banking sector, you've got the lawyers. We've got more lawyers in Bristol outside of London than any other city. So I think there's a lot to be said for the area, definitely.
Yeah, and on that lawyer front, the strength of the Bristol Law Society is it's a key galvanizer of activity across Bristol and Bath. And I suppose the other point about the Southwest is that it's long benefited from the capital effect, London money. How significant has this been in these times, and how do you think that will play out in I don't know, a couple of years' time going forward? Will it continue on much the same trajectory? Will it diminish, increase? What's your take? Any of you?
If I can, Greg, I think from our point of view, what we're seeing is, and I think post-pandemic, we obviously read a lot in the papers about people moving to the country and everything else, and I think Cornwall, Devon is obviously an area where there's been a huge increase in interest. Bristol, being, let's say, the capital of the Southwest, is in a great position really to benefit from that, I think. You've obviously also got commuter into London and Birmingham, which is increasing as well. So with the electrification of the railways and so on. So those kind of things are only going to benefit Bristol and Bath effectively. But I think certainly post-pandemic, it's certainly short and medium terms, people's memories, they're going to be wanting to move into the country and into Devon and Cornwall, I think, and it's only going to benefit the region as a whole, I think.
Well, there you are. But between you, there's at least a dozen factors, all positive, that you cited. Maybe, I don't know, clipping 20 or some such. So all is rosy in the Bristol property market then. Really, what inhibitors, what barriers to continued success might you be considering?
I'll just come in on that one, Greg, if I may, and I might bring James in the back of it as well, because we've got a good relationship with the HBF, and we publish a survey periodically, which we undertake with them. And I think what's quite interesting is that the recent survey that we undertook around barriers to entry or barriers to business development for developers. There wasn't so much talk about COVID, but it's the same olds which still appear. Planning, cost of labour, supply of materials, these are the things which seem to be still at the forefront of developers' mind, availability of land. So I think these are the things which need to be addressed equally, along with looking at them against the backdrop of the pandemic itself.
And that availability of land point, scarcity always means that values will be high, but volumes therefore will be more limited. Is that it's perhaps simplistic, but is that essentially the battle that's out there? The scarcity.
Well, that's probably right, but it also disproportionately affects the SME developer. The larger developers or the big PLCs can hold on to land, but it's much more difficult for the SMEs to. Or much more expensive for them to be able to do that. So freeing up that land is and of course, yes, the affordability funnels into that as well. So I think it's vital that that is addressed in order that land gets freed up for SMEs to build them.
I'll come to James in a sec about how it might be addressed, but first up, John, from your business's point of view, Juniper, how does that issue of land availability, price play out in terms of you developing your business?
I mean, yeah, absolutely. You know, Rich is right. It's there is a scarcity of land out there. It's not easy to find. It's easy to find development opportunities, but you know, people always want the best bang for their buck as far as land's value go. So yeah, it's crucial for us. We do a lot of conversions within Bristol city centre because that tends to be the opportunities that present themselves. There aren't huge development opportunities within Bristol. The ones that there are tend to be very large and suit the much larger developers. So from our point of view, a lot of it is down to opportunism. So we look to Bristol, South Gloucestershire, North Somerset, Baines as well, but we don't need to spread our wings any further than that. There are sufficient opportunities out there. It's just about picking and choosing the right developments that suit us.
And staying uber close to the cities and the trends and the people and you know what is actually happening within the cities, I guess.
Absolutely. I mean, all of the reasons why we want to stay in this area are everything that's been discussed so far. You know, it's a fabulous place to be. We don't need to stretch too much further afield, but yeah, absolutely finding the right developments that suit us and the buyers we're looking to attract is crucial.
James, a simple question but a complex answer, I'm sure. There's a reference from Richard about how this issue of land availability might be addressed. Well, how would you like to see it addressed?
Yeah. Well, actually, I don't think it is such a complicated answer, Greg, because the solution really is in local plan production and regular up-to-date local plans, and particularly giving priority to the production of the spatial development strategy for the West of England area. They attempted it back in 2019, and that plan failed because they failed to justify their strategy for distributing land across the city region. But they are powering that up again, and it's possible that we might see a consultation on that initial document this year. But that will deal with a particularly difficult question, which is accommodating Bristol City's needs. Bristol City, for a long time, has struggled to accommodate its housing requirement, and under the government's new standard method, it has to increase that supply by a 35% uplift. So their housing target goes from something like 1,300 dwellings per annum in the current local plan up to 3,196. And there's no way that they can accommodate that within Bristol City's administrative boundary, just as they couldn't last time back in 2011. And I was involved in that local plan. They will have to cooperate with their neighbouring authorities, Bath, North East Somerset, South Gloucestershire, and that's why that production, that spatial development strategy is absolutely critical, because planning is the chief barrier to delivery, and there are political risks associated with that. I alluded to that in my previous response. You know, at the moment, the housing market is driven by the equity rich, those people who have housing wealth. And there is no end of demand for their requirements in the southwest and the Bristol City region. But those people who can't get on the housing ladder might become increasingly restive. And we will certainly see local politicians trying to respond to that in various ways. That might not necessarily be in the interest of the house building industry through some of the measures that they might introduce. But to a certain extent, those problems are of the politicians' own making. It's that failure to update local plans and drive them through. And that's why I had a conversation with the West of England Combined Authority to try and help them get that spatial development strategy forward, because that's the only way in which you are going to be able to find a sensible and sustainable way to export Bristol City's housing need around the wider administrative area.
Yeah, I mean, it probably tallies with the figures you've just said, but one figure that I saw was 25,000 more dwellings over the next 10 years, which is a substantial uplift and very much a top-down led figure, but which requires almost literally accommodation, as you say, with the other neighbouring authorities, which is inherently complicated, surely.
Well, they do seem to. One of the things that I was pleased to see the current mayor doing, Tim Bowles, was to actually try and move the spatial development strategy forward. And I'm pleased to see the way that those constituent authorities, Bristol, Bath and obviously Somerset and South Gloucestershire, are still willing to work together. It would be good if North Somerset was part of that fold, but that's not going to happen. We know the political tensions there. But I was kind of relieved to see them prioritise that. And the Conservative mayor candidate, Samuel Hughes, is it? I'm trying to remember his name, has actually said that he will prioritise the progression of the spatial development strategy, which is a relief to hear, because problems with spatial development strategies elsewhere in the country, such as in Greater Manchester, has been a very backward step for housing delivery in this country.
It's come to matters almost literally closer to home, which is the impact on the pandemic of thinking of consumers about their property. Specific area would be how you might see the increased, which I think we all agree is going to happen, increased working from home factor. So greater growth in outlying villages, leafier areas, longer commutes traded because they're made less often. What do you think of that? Are you building that into your expectations?
I can come in and talk about that a bit. I mean, yeah, we've got a few developments at the moment in areas like that. One in South Gloucestershire, actually two in South Gloucestershire, and they've been extremely popular. They've sold off plan, lots to locals, but also lots to buyers from outside. I think green spaces, being near the countryside. I think connectivity is hugely important. People have never asked so many questions about internet connectivity as they have done in the last 12 months. That's in a city and in the countryside as well. I think being near the countryside, near outside spaces, but crucially having some outside space as well is something we've seen a massive increase in. So selling a flat with an outside space, for example, in the city, really, not very difficult at all right now. Those without outside space or direct access to outside space, are a bit more sticky right now. So people are certainly thinking about that in the wake of the pandemic a lot more than they were previously. So I expect to see that continuing. I think flexible spaces within homes is something else that people are considering a lot more, thinking a lot more about actually where can I work from in this particular home, whether that's a dedicated study or whether that's just a more flexible space within the setup of a home. So that's something that we're going to be factoring into our future developments as well.
And conversely, if very broadly as described, the need for desire for more space probably means going further out. Conversely, what are the prospects for the more central city centre places? You mentioned about apartments which don't have outside space, but does it sort of run the risk almost of slightly hollowing out the city centres, or else in tandem they need to go younger because it's the earlier stage of the property ladder? What's your take on city centre residential premises?
Yeah, I mean, I think that's exactly what's happening. We're seeing a much younger demographic within the city centres who maybe a bit more mobile, maybe enjoys sort of spending time in cafes, restaurants, and having access to that type of facility. Maybe foregoing the fact of having any direct outside space, but I mean, but being near a park, for example, and green spaces and things like that. Is certainly something they're looking at. But yeah, first-time buyers is what we would be looking at for any city centre development, and all of the help to buy incentives and 95% mortgages, etc. What will attract them more, as much as the location itself, I think.
Yeah. I know this is primarily residential, but I just want to get to your takes, all of you each really, on the commercial premises within city centres and the impact of this. And hollowing out is too strong a term. I know it's been used quite a lot about the City of London, and it much less applies to other cities like Bristol. Most reports, anecdotal and structural, suggest that the commercial property sector remains pretty robust, that there's not the flight to working from home, the collapse of offices, the decline of city centres. The decline is only temporary because of retail and hospitality, which is beginning to come back. What's your take on the commercial vitality in Bristol, commercial sector?
If I come in there, Greg, my take on it is offices are still very, very important. I know of a couple of banks, not on this panel, but they're looking to reduce their office take up within the Bristol region quite significantly. But I still think the office has a really important role within businesses. I think, you know, when the pandemic hit at the beginning of last year, it was all new, and it was kind of exciting to a certain extent to you know, work from home, etc. But ultimately, as it's gone on, mental health and well-being has been impacted. And I think as a team as well, wanting to grow the team and grow the business as a whole, it's important to get back to the office. I think what the pandemic has done is probably hastened the changing dynamics of the office, but not necessarily the need for it.
But then specifically in terms of commercial property values and vitality, you would, I mean, I'm putting words in your mouth, you'd see a degree of ebbing and flowing. Maybe there's a bit of downsizing from some companies, but there's others using space differently. So net, reasonably robust?
Yeah, I mean, I don't know. I mean, I'm not, in terms of the, you know, the take up of offices, in terms of rent and prices and stuff, like, it's not my area of expertise, but certainly from what I'm seeing and speaking to others within the industry, it's just going to be a changing dynamic. But still, the use of the office is important in commercial premises, because, you know, wanting to grow, you know, we call it the junior members of the team, and their learning and increasing their knowledge within their sectors and stuff is so vital in terms of getting to the office and learning off the more experienced members of the teams, really.
Let's go back to more domestic matters, and let's talk about sustainability. How important are sustainability issues in new builds going forwards? Are potential customers, partners, and so on? Of course, there's legislation, but separate to legislation, is there a rising sense that this is a determining factor in where to buy?
I think it's becoming that way. It's only going down one route, sustainability. Obviously, government, local authority initiatives, and so on, the green agenda, if we call it. From the shop floor, my own personal view, I don't think we're seeing as much of it in developments as we probably should or could. We're monitoring about over 1,000 residential units in the southwest, and I was totting them up earlier, and I think we're only about 20 to 25% of those are really achieving sustainable methods beyond, you know, the building reg standards, as it were, really. And I think the barriers to that really is probably cost, but also experts in those fields, and a shortage of suppliers and so on. I think. Sorry
to interrupt you, but could you give an indication of the sort of shortfalls that there currently are from where it might be and will be subsequently? What's the type of work what's the pieces that are missing?
So I think that the pieces that are missing is really kind of the sustainable, if you want to call it that, the sustainable cost of doing it, really. You know, I think between traditional build, brick and block, and the kind of standard building regs, and achieving a passive house, which is kind of the top-notch sustainable development, there's up to 15% difference in cost. And until there's a bit more parity between the cost and actually the value of the developer is getting at the back end, because that's just eating into profits effectively at the moment. Essentially, you know, your sustainable product, your sustainable house will be easy to sell. It's a unique selling point. But is the developer actually achieving that in terms of the profits and pricing? I don't think they are at the moment. And I think until it gets a bit more common in the market, those prices or costs will come down, and it will start to create a bit more parity, and then it will be a lot more sustainable going forward in that sense.
If you look at other, use the term broadly, green areas, there is a premium which some consumers will pay. Electric cars, more ethical food supplies, whatever the iteration is. Is there a prospect that enough people would consciously pay a premium for a sustainable house build, or is that just pie in the sky?
I think longer term, yes, because I think that's the route we're going down. I think certainly the end user will benefit ultimately because the cost of living will reduce. But at the moment, it's about building it, building those units. And I think until it becomes a bit more cost effective for the developer, it's probably going to be less. And it needs more probably to just to go with it. Maybe spend the cost in the short term, but they might seek the rewards in the longer term because they'll be the ones doing it a lot sooner than others.
You've touched that. Quick. Sorry. Apologies, Chris. I think we've got a slight latency, and I think I cut across you there. Apologies for that. You've touched on one point there about lead-in times. Now, I'd like to put this point to Adam. That the sector is having to effectively anticipate changing consumer values, changing some way down the line because of that lead-in point. So can you talk about that environmental agenda and how that's informing thinking about sustainability credentials and so on?
Yeah, definitely. I think I would say is that we've got two schemes that we've valued within the last 6 months which have been sold on their environmental credentials. Sorry, as in sold, as in they will be selling once they've developed the houses, they will be selling it on their eco credentials. But prior to that, we've had nothing. There's been nothing before that. There's been talks of modular construction in specific cases, but I've got two schemes now, which is the first time this has come across my desk. And is this the start? This is obviously the start of it. And it'll be interesting to see where it goes and what effect it has and whether it has an effect on sales rates, on sales values, or both. And if it starts having an effect on sales values and sales rates, then I'm sure more people will be adopting it, because sometimes if you can sell your product quicker, that's as good as having an increase in price because you're carrying the debt for less amount of time. So the two schemes we're looking at, one is a new and home scheme in Tickenham, and it's their first development where they want to achieve zero carbon on what is quite a large scale project. So their carbon reduction measures include hot water and heating by air source heat pumps, which is in lieu of the traditional gas boiler, high performance insulation, mechanical ventilation, a high degree of dwelling air tightness, underfloor heating, solar panels, and car charging points already pre-wired in. And in terms of offsetting carbon, they're going to be planting a wildflower meadow and over 1,000 new trees. And obviously, you're not going to be able to do that on every development, but we'll be watching that one very closely. The other development was very well funded by an excellent bank called Close Brothers.
Oh, really? Oh, well, that's welcome to hear. So tell us a little bit more about that project then. Yeah,
and that one's again, it's by Stonewood Housing and it's in Siddington. So again, it's going to have the PV cells, glazing, the orientation to reflect solar gain, a specific choice in materials. But I think the interesting thing is they've actually built a solar farm on this one to help, which everybody on the development can use. So that offsets the carbon use and the energy consumption on the site. And they're looking to achieve 70 to 85% in carbon emission reduction. So again, they've only just bought the site and they're starting out to develop on both of these sites. They're only just starting. So these are going to be two case studies that I imagine everybody will be using going forward, because if you do get those increase in sales, like I mentioned, and values, then everybody that £15 increase in build cost might all of a sudden become, you might be able to stomach it. Plus, it'll be interesting to see whether purchasers, because buying a house is always quite an interesting experience, because sometimes it's your biggest purchase ever, but you maybe look around it once, maybe twice. So how aware will you be of all these benefits and changes to the house so it costs you so little to run. And I think it's educating the purchaser to some point for them to understand it and look for it.
If it's not too egregious, I would file educating the purchaser under marketing through such media as Bristol Life and Bath Life. But there again, I would, wouldn't I? Richard, let me bring you in on this. I mean, either to talk specifically about that particular project, or if you don't wish to, more generally about, as a funder, how you look at sustainability. Is that a sort of an inhibitor because it's fundamentally riskier because it's more expensive, or is it potentially something which is more attractive to you as a funder, partly for the reasons that Adam has gestured towards?
That's a good question. I can't really talk about the scheme that Adam is referencing, largely because it's one that a colleague looks after rather than myself. Just to pick up on Chris's point, quite clearly this is the way that the industry as a whole is going to be heading. I think as a funder, we're quite reactive in this respect. We're very much led by the level of appetite in the industry. So if our clients are putting these schemes together, we will find a way to fund them. There are obviously challenges, for example, modern methods of construction. A lot of it is off-site. So how do you deal with that as a funder? We are doing it and we can find a way to do it, but it's still quite early in the piece to be able to give a definitive answer on that. But certainly, I think as the industry is going that way, we will find a way to be able to keep supporting our developers as they go through. I suppose in terms of the other challenges, then it is affordability, isn't it? And when you put that into affordability of land as well, it comes back to a factor of cost.
Can you talk us through the profile or process rather from Close Brothers' point of view about assessing projects to fund? Very broadly, what the time is, what detail, but really the areas in which you have a concern over risk, for example, or deliverability. How do you assess projects as they come forward, whether or not to fund them?
Well, principally, it's the developer that we focus on most. We always want to see a track record, ideally of building and selling exactly what they're proposing to build or sell in this particular case. So that's the key point. And you do tend to find that if you're talking to the right person, they're probably doing the right scheme. That seems to follow through. And then we assess schemes from the back forward. So we start with GDV and then we try and make sure that we cover all the build costs within the loan that we can offer. So it means that the developer's equity goes in first, which of course then feeds back into these questions. How expensive is it for them to build? Because if all our builders, it means they've got to spend more on the land. So it'll be an interesting and evolving situation.
Mm. And does that, just to pick up on one key point, of course, it's the reputation, track record and deliverability, and preferably that they've done something broadly similar to this previously. Doesn't that of itself make it trickier to assess, I'll call it the new stuff, such as Adam was talking about in terms of the sustainability agenda?
Yes, it does. Although we're probably a bit more mature. Certainly, if you'd asked me that question 5 or 6 years ago, that would absolutely have been the case. But I think there's more evidence in the market, across a variety of different evolving sectors, PRS and so on, that we can fall back on now. So we're not quite in the vanguard, as it were, anymore.
Yeah, as ever, everything continues to evolve, and if an underlying consumer trend and awareness is going in one direction, which was pretty much Chris's point, it will eventually flow through in all the iterations. Let's come back to build costs, which a number of you have referenced. What's the sort of again, it's a simple question with a potentially complex answer, but what's the prognosis for build costs? What are the variables that you're seeking, to assess and indeed mitigate where you can?
As the QS, I better come in on that, I guess. I think what we've seen, certainly over the last 12 months, are fairly volatile price trends, really, mainly around materials, I'd say. we've seen the various headlines with steel increasing quite dramatically over the last 6 to 12 months. What we're seeing as monitoring surveyors for the banks and speaking to various kind of regional house builders is still price hikes in various other materials. So timber has been a reoccurring theme really over the last 12 months, essentially. And you've got, a huge demand really for general building and construction materials and labour at the moment. So that's, just on the basis of supply and demand, costs are going to increase. And I think our current prediction is that tender prices will continue to increase over this year and the next couple, probably between 1% and 2% this year, up to 2% and 3% next year. And I think that's just, we don't know what's going to happen in 6 months' time. I think we alluded to the government's support and what happens when that starts to filter out, whether that's going to hit the construction industry, which has done so well really over the last 12 months, probably the only sector that really has. We don't know that yet, but certainly the issues that we've got in the industry at the moment is material prices, importing from abroad following Brexit. That's the raw materials. EU workers not returning since January 2021 because of Brexit. And so all those kind of factors are, playing into potential increases in prices, really.
Yeah, you brought up the B word, and I just want to ask you each about this, about the materiality of that impact. And of course, it's still very, very early days, and it's difficult to disaggregate its impact from the pandemic's impact. But how material will Brexit be in terms particularly of cost, but also supply, delays in supply chain, availability of labour? Or is it something you just ride out? Where are you each on this?
Greg, if I might come in that. There's so much I wanted to comment upon the environmental stuff, but
please do. Take Brexit first and come back to the environmental.
Yeah, no, we're not seeing it with Brexit. And I was shaking my head at what Chris said. We were expected within the HBF that we would see a plunge in labour supply, particularly in London, but it just hasn't materialised, which is a great relief. And it certainly hasn't materialised in the southwest. And we've done a survey of our members on that there is a problem with labour supply generally, particularly a shortage of bricklayers and ground workers. And as Chris said, the materials costs are shooting through the roof. But that hasn't got anything to do with Brexit. That's to do with international markets. China and America in particular are willing to pay more for timber, and timber production has fallen dramatically in Finland and Norway. Finland and Sweden, the chief timber producing countries, and China and America are willing to pay more. So it's absolutely right. Those materials costs. As the Construction Leadership Council's Product Manufacturers Association has forecast, those costs are not going to get better. They will continue to rise during the year. And call-off times for house builders, the amount of time that they have to register to get materials are growing longer and longer. They've typically gone from 2 weeks up to 22 weeks for timber-related products at the moment. The big shortages in timber, steel, appliances, roof tiles, and now plastics and aggregates. So those are the major, aside from the planning challenges, Greg, materials and labour supply are going to be two of the chief barriers to delivery going forward.
And I think part of that problem is actually national house builders stockpiling. So again, speaking to some regional house builders, they've heard that nationals are stockpiling staircases and roof battens because there's a shortage of timber that supplies those. So it's not easy, I don't think.
James, just on that very specific point about stockpiling, is that something that you are aware of, or is that as does happen in these times, one story gains legs and gains a legitimacy it otherwise may not have?
It's true to say that the majors with bigger purchasing power do stock up to a certain extent, but I don't think it's a major contributing factor to the shortages. I speak to members up and down the country big, medium and small, and they're all reporting big shortages. The latest being scaffold bands. I heard yesterday scaffold bands are now in short supply.
Who knew? I'm afraid I certainly didn't. There's a point being raised by, which I'll bring in from Andrew Brown, Buckley Gray Yeoman Architects, and thanks for this. He's made a longer point here, but I'll praise it, that there's almost a paradox at these times. On the one hand, the pandemic has meant an acceleration of current trends. The great pause has been the great accelerator. But the other, the more things will stay the same, than will change. Are you experiencing that sort of dichotomy, that you're getting sort of sudden sort of surges in some areas, but fundamentally the underlying assumptions are the same? He cites, for example, that his clients, both residential and commercial, are much more focused on health and well-being and amenity, sustainability, which we've touched on, and building, servicing the environmental quality. So are you seeing that sort of, the push-me-pull-you, some things like suddenly sort of accelerating, others just it's the same old, same old? Is that your world?
Well, I'll quickly answer that. Certainly, the what has stayed the same is the underlying demand for housing, and the fact that we're not meeting that, and we're actually likely to fall behind in that regard because of the problems of the planning system. But what has changed is the sustainability agenda. But the sustainability agenda has two elements. It's building performance and the building regulations, and the government is introducing some challenging targets in relation to that, not least for energy efficiency and electrical vehicle charging points, but also location. And John was referring to the demand for homes in outer-line villages in the Bristol City region, which is very strong, but perhaps not the most sustainable location. And certainly the plan makers would like to concentrate more development within the Bristol City area and other town centres. That isn't where we've seen a change. The desire for people is still a house and a garden. Whether there is an appetite, especially with what I call COVID and cladding, those twin problems, whether the appetite for flats will continue to be the same as before, I think is harder to foresee. But definitely the focus upon amenity and the environmental performance of your home is probably changing.
Yeah. What about, related to that point, what about the potential for growth? It's already there, but not major just yet. Potential growth in the sort of shared environment, work-live areas where you're part of a sort of micro community, all social aspects are on your doorstep type of thing. Those sorts of created worlds within city centres. Do you see that as a significant growth area? I suspect not from the silence.
I suppose I can answer that to an extent. Within the centre of Bristol, there's been a significant volume of PRS or build-to-rent schemes, which are specifically designed for rental and not for break-up and sale. And these tend to have large amenity spaces, so large shared communal areas. And in fact, there's been so much build-to-rent stock in the middle of Bristol, there's been no private sale. So if you were to build something in the middle of Bristol for private sale, I imagine you'd do very well, because there's just been no other competition. So we're definitely seeing more of that, but Bristol is definitely lagging behind the other regions of Birmingham, and in particular Manchester, and obviously London. And then the other aspect is co-living, which is again even more different, with smaller rooms, so probably more akin to a student accommodation, but a vastly superior amenity space, including, I don't know, kitchens, bars, restaurants, cinema rooms, gyms, the lot. So it's definitely on the cards, and it's definitely changing, and we're just starting to see the tip of it again in Bristol. So again, it'll be one of those to watch this space. But apparently, I'm told it's aimed at multi-generational, so it's not just young people. It will be aimed at, I don't know, people on contract work and short-term occupancy kind of jobs. But to be fair, it must be attractive more to the younger demographic than the older demographic, definitely. But
You'd think it's
I think we always have to ask ourselves in these situations whether that is the home that we aspire to own. Certainly, government planning policy is really doing everything it can. It's throwing everything, including the kitchen sink, at trying to encourage more developments to come forward in town centres and high streets, and it's done that through its changes to permitted development rights. But I'm always worried about this. I'm not necessarily sure it's what young people really want. It's where they will reside and live because they need somewhere to live. And owner occupation in a tower block, I live in a tower block, is great if you've got some private outdoor space, which is what you will need to be providing to make it attractive. But to a certain extent, as Adam has said, a lot of these schemes are built to rent or shared ownership, co-living schemes, which don't necessarily meet the aspirations of the people. And I think policymakers and civic leaders have to be very careful about that. You know, they're driven by a need to try and cram in as many dwellings as they can into city centres in order to appease, you know, the green belt dwelling middle classes. But they need to consider what the political ramifications are for that in the medium to long term.
Talking of which you touched into, which is government initiatives. I'm just interested to hear a couple of thoughts on this about specifically, say, for example, the SDLT holiday, whether that has, you know, we're still in it currently, whether that has benefited the market or as opposed to maybe overheated or worse, distorted it. So the impact of government initiatives there, and then separately, the second one is around the 95% mortgage scheme, which has encountered at least some initial criticism. James, this is probably more your territory for first. But,
well, the stamp duty land tax holiday has been very interesting. It's generally it's generally had a muted welcome for our members. It hasn't really had a big impact upon their business model. If anything, it's made it more difficult because you've got a lot of demand from the prospective purchasers who, you know, are putting a lot of pressure on them to meet the stamp duty deadlines of June and October for its final finish. And at a time when they're struggling with planning, you know, getting planning permissions, discharge conditions, reserved matters agreed, while also struggling with materials and labour shortages, you know, they're really struggling for it. But it also doesn't have a big impact upon the type of demand that they're seeing for their products. The government's mortgage guarantee scheme, which is to encourage more lenders to provide 5% deposits, as we've heard over the weekend, it's trailed in the national press. Lenders have said that they won't be lending against new build properties because they're concerned that new build properties are overpriced and they'll depreciate faster than the second-hand stock. So that's disappointing because we hoped it was something which would, alongside the Help to Buy scheme, it would help support demand-side measures. But as it happens, it seems that a lot of lenders are now providing 95% loan-to-value products anyway. So to a certain extent, lenders are making these changes on their own volition without having to rely on the government's mortgage guarantee scheme. But we are working. Sorry, go on, Greg.
James, you go.
No, I was just going to finally say, but we are the current Help to Buy scheme, which has been very beneficial to the house building industry. It's supported something like 270,000 sales, I think, including 82% have gone to first-time buyers. You know, has been a big boon for the industry. I recognise the critics of it, and the Treasury isn't particularly happy about it, and that's why it's coming to an end in the end of March 2023. But the HBF and lenders are working on a replacement indemnity product to replace Help to Buy, of which more details might become available soon.
James, you touched on the reluctance of, in fact, refusal in some cases of lenders to loan on the new 95% schemes for new builds. I wanted to put this point specifically to John, actually. Point which may send a little frisson down your spine. It was Knight Frank Finance talking in the FT at the weekend, saying buying a new home is like buying a new car. Buyers are paying a premium for the fact that no one else has ever owned it. But the moment you get the keys, it's worth more than you paid for it. Do you accept that premise? And if at all so, how do you counter that apprehension that value decreases as soon as you buy?
There's always been this perception. I mean, but to my mind, you know, the market value is the market value ultimately. I don't perceive that anything we sell is worth 10% more than a neighbouring property or a neighbouring building, for example. And I think the other thing to factor into that is that you don't have to do anything when you move into a new home. Certainly the homes we provide, you know, we have to compete quite closely with national house builders, much smaller developments, obviously, but we provide an awful lot more as standard. You know, kitchens are fully fitted with all of the mod cons that you would expect, you know, often quartz worktops and, you know, flooring, etc., none of which is provided by national house builders. So from our point of view, you move into one of our homes and you don't have to do a thing. Whereas if you were to buy a second-hand property, inevitably there's money to be spent unless they've just done it up and you happen to love their particular taste, you know. So you buy a second-hand property, you can expect to certainly over the course of the first 5 years of ownership, change a significant proportion of what's already there. So I think that's a bit of a misnomer, really. It's a bit of a sweeping statement. And
you know, if needs be, you could almost say, well, you buy an old property, you've got the on costs of this, whatever they may be, and to the extent if there is any reduction in value in a new build, you've got the offset of not having those marginal costs, as you say, but also you haven't got no, you know, new roof needed or new plumbing, new electrics, new whatevers.
Yeah, absolutely. Yeah, there's nothing you need to do with, you know, for the first 10 years. Obviously, you've got a structural warranty in place as well, so you've got that peace of mind, which a lot of people will pay for, much as they will do when they buy a new car. There's advantages of doing that over having a.
And as we all know, in everything, there's no such thing as inherent value. Value is what someone will pay for whatever the service, goods, or product it may be. We're going to come to the end of this with a willfully general question for you each. Just give your observations to this. Which of the current changes that you've been experiencing, either, you know, personally but really professionally, are strictly temporary, and that's it, we'll revert to being where we were, or which might endure from this pandemic time? Chris, you're a thoughtful, analytical type of person, so tell us your thought points about you know, what might endure from these times.
I think what might endure is I go back to my point about office working. I think there'll still be an element of the work-life balance, essentially, and wanting to work from home. I think the office is still very important, but I think the dynamics will have changed. I think at the moment, the only people that are probably really benefiting from things are the employers, because people are working longer hours because essentially they're living at work and not working from home. So I think, you know, there will be a shift back to the office, but I think there'll certainly be, you know, a continued element of wanting to work from home and have that balance, really, and spend more time with the family and so on.
Thanks. What other impacts on property are you envisaging from these times?
In terms of property, I think it's just, certainly this year, I think, as you said earlier, I think there might be a year of two halves. I think things are continuing to go really well. I think costs, we alluded to earlier, I think that's going to continue to increase. But in terms of properties, I think there will be a requirement for or a need for outside space. I think that's going to be something that will filter out. I don't think necessarily we might not be seeing it at the moment because it's still too early in terms of new projects. But I think certainly if we had an architect on board today, I think they'd be suggesting maybe less living space but more outdoor space in terms of new homes, I think.
Yeah. Okay, any final thoughts from others? Because otherwise I'll come to Richard for his final thoughts on the discussion today and perhaps Close Brothers' position in this sector and your prognosis for the times ahead. Richard.
Thanks, Greg. And actually, I'd just like to say, firstly, thank you to all the other members of the panel for coming along today. It's very much appreciated. I think that's been a really interesting discussion. What's particularly interesting is that while much has changed, much stays the same. We've been through a monumental year. I think the industry, as I said at the outset, has been amazingly resilient, something which perhaps we don't get as much credit for, or developers really don't get as much credit for as they should. There's been a lot of government intervention which has helped with that. That's starting to run off. We haven't even touched on unemployment today. Furlough is about to will be ending shortly. But then there was interesting news yesterday in respect of unemployment still running at 5%, and although people were thinking it might get to 10%, now we're thinking it might be 6% as the hospitality industry. And so there are a number of factors at play here, but equally interestingly, there are still the embedded challenges which developers are facing in respect of planning, supply, labour, and so on. But I think, to coin a phrase, as the spring uncoils, it does seem to me that we're less worried about there being a structural credit event. So there's real sense of momentum and positivity going forwards. And if we can start to have a look and address the embedded issues which SME developers are facing, then I think into the second half of this year and going forwards, I think there's real cause for optimism.
Very good. And in terms of even more cause for optimism, there's some assessment there's something approaching £180 billion, which is currently residing in various savings accounts and unspent areas of corporate life, some of which will find homes in the months to come. Capital needs to find value, and capital will find value in property and elsewhere. And that tranche of money will flow through the economy at some point. And of course, there's equal and opposite elements. We all got to interpret that. But to your point, Richard, I think there's very, very good prospects for an exceptionally good second half. We've had this slightly odd first half. We've had, in many cases, a pretty horrible last year. But the second half of this year to come does look well placed indeed, as we've heard from each of you today. I'm going to close by saying this. Thank you to our business surgery sponsor today, Close Brothers Property Finance, and to our all-star panel, starting with Richard Hemmings of Close Brothers, Adam Greenwood, JLL, Chris Lester, MDA Consulting, and James Stevens, HBF, and John Morgan, Juniper Homes, for their insights, your insights today. Thank you for your time watching this, and whether live or on YouTube subsequently. And also, again, thank you for your support for Bristol Life as this city reopens and the new world starts to emerge. A world in which fresh thinking like today, an ability to re-engineer offerings is yet more important. And also a world where getting active, marketing what you do, driving your business forwards with increasing confidence is absolutely essential. After all, the future is unwritten. From Bristol Life, good luck to you all in the coming months. This has been a Media Clash production, and this has been our latest Bristol Life Business Surgery. Thank you. Bristol together, always. Thank you.